Well, hello everybody. Welcome back to Loser to Lambo. It's good to see you all again. All right. So people understand turning your life around, taking control of your life, self-empowerment, learning, growth, personal development. What people don't understand is how somebody goes from such little money to owning a house and a Lamborghini and how that can actually be possible. So this is the week to find out. Forex, here we go. All right, so I have done months of online learning all about Forex. What is Forex? Why Forex? How did I find out about Forex? Why is Forex important to you? How can money be made here? What is this? So in my search to find out who's owning Lamborghinis and how they're getting them, I see a lot of investors, right? Entrepreneurs, a lot of that. People who started their own businesses, you know, they're making the top dollar, paying people below them and working it out that way, right? But it's a lot of risk and usually involves a lot of startup and this and that. But through my video series, you can see that it doesn't really take that much. You can start at the bottom and just slowly work your way up. Just don't expect to, you know, jump from the bottom stair of the staircase to the top stair of the staircase, right? One step at a time. And even, you know, the first step may be something little, like writing things down. It doesn't have to be like, oh, I need all this money, I need everything now to be able to make this happen. No, that's not right. So stocks kept coming up, people who trade stocks. So I looked into it and found out that you need a lot of startup capital to get into seriously trading in the stock market. You need, you know, they recommend, you know, $10,000 to $20,000 worth of capital in an account that you can trade with. Now, obviously I don't have that. And if you do, you're probably not watching the Loser to Lambo series. So peace out. Here's the thing. So I looked into stocks and I started to learn bits and pieces along the way. And one thing I started to learn about in the stock market was reading charts. So when it came to stocks, one thing I found really interesting was the technical aspect of things. There's a couple different kinds of traders. You have a fundamental trader, that's someone who trades along with news reports and this and that. And I do follow some of that. And then there's your technical trader, and that's someone who trades off of charts. Now, when stocks are moving up and down, that's displayed on a graphical chart that anyone can access, and you can see what, like the NASDAQ is trading at, and these big, all the big stocks, any of the stocks, it's all charted, and that charting goes along with people buying and selling shares of stock. And it's, at first glance, it looked like a random bunch of lines, just up, down, just a bunch of zigzags on a paper. And then as I started researching it and seeing that people can actually hack these charts, you can look at your chart and start drawing lines and find trends in the charts and find patterns in the charts to predict where these are going to go. And if you can predict correctly, there's a lot of money to be made. On my search to learn more about stocks, and even though it was way out of my capital, I kept doing some research, and then I learned about Forex, foreign exchange, that's trading currencies. Okay, a good example of Forex is you're gonna go to the States. I'm in Canada, so I'm gonna go to the States. So first thing I have to do, go to a bank and exchange my Canadian currency for American currency. And depending on what that exchange rate is, I'm gonna pay, you know, X amount of dollars for my American money. So usually, like the way it is now, is I want $100 American, well, that's gonna be about $300 Canadian. Okay, so it's not that bad, but that's the idea. And then what you're gonna do is, at different times, that American dollar, let's say, is worth this much more than the Canadian dollar, or that much more than the Canadian dollar, and that varies, the value. It's worth more, but how much more varies. And depending on when you go to trade your currencies over, exchange your currencies, say I'm gonna go on my trip, that rate will change, and I'll pay more or less for that American dollar. Now, how Forex works is you're doing the same thing, but on a bigger scale. So you're taking an account through an online broker, and I'm going to take my capital. You can start with as little as like $500. You can start with $250 if you want, but I wouldn't recommend it. And I've learned a million reasons why. So what you're going to do is you're going to watch these charts and see how much the American dollar is worth compared to the Canadian dollar. And the way it works in Forex is you're actually trading to like the fourth decimal place of what that exchange is. Let me explain that better. It's very confusing. What I'm going to do is let's say for every dollar American, I have to pay, let's say, for example, $1.35 Canadian. All right, now, as those charts differ, I could actually buy it at a lower price, $1.25 Canadian, and buy a whole bunch, and then go and exchange it back. And when the prices go higher, and then so I can buy a whole bunch cheap and sell it at the higher price, and use this technical analysis of these charts to predict where it's going to go and when it's going to be worth more or when it's going to be worth less, because you can make money either way. You can make money as the currency gains strength, and you can actually make money as the currency loses strength. So when they talk about this big economic breakdown that we're supposed to have in the next few years because all the banks are broke, go ahead and look into that. It's kind of scary stuff. But let's say the US dollar absolutely tanks in the next year or two here. Well, as a foreign exchange trader, I would actually be considered a retail trader because I trade with just my own money. I don't trade with other people's money or through a broker or a hedge fund, like a hedge fund broker. What I can do is I can actually follow the charts and wait for that US dollar to plummet and make money the whole way. As it's losing money, I can make it by betting that the other currency is going to gain strength over the American dollar and make money the whole way down. In 2008, there was many self-made millionaires, people who made money as the economy crashed. And it's not like they wanted to crash, they're just following the charts. And the more things you can find in the news, and then how that matches up to how the charts are going, and you get more and more points towards kind of, you should make this trade or make that trade. It's if you're guessing, you're doing it wrong. It's predicting and then keeping your losses to wins. You got to keep that ratio under control. And there's a lot to consider. Like if I'm going to go in on a trade and let's say I think the American dollar is going to gain strength over the Canadian dollar, well, I can have something in place where I can make my trade. And if it happens, if the US dollar comes up a bit and it happens to plummet, well, I can set a stop loss. I can set a line where it's like, listen, if it goes where I'm all of a sudden losing $150, then stop. I want out. I'm not going to win this. I'm not going to make money on this trade. I want out. I clearly predicted the wrong way. And those losses are going to happen. They're expected. As a retail trader, those losses are going to happen regardless. And that's okay. That's why you keep your chance to lose small. So I have, like, if the market goes the wrong way this much, then cut me out. But my chance for winning, like for making it a successful trade, like my chances of where the charts are going to go, let's say that's this big. Well, if I lose this much. If I win this much. So, it's maintaining that proper win to loss ratio so that you don't have to guess right every time. You need roughly 4 out of 6 correct guesses and you're profitable if you're doing like a 3-to-1 ratio. So, I could lose, if I lose, I lose this much. And if I win, I'm winning 1, 2, 3, right? I'm winning 3 times that. And I've been trading a demo account now for several months, and as I get better at it, I can actually keep my losses. My biggest loss in the past while was minus $400. Okay, that went the wrong way. I got a lot of lots, so you actually determine kind of how much money you want to put towards the market going whatever way, and you can use more money at a time. And I was trading with a $3,000 fake demo account, but my real account should start with $1,000 or $2,000. And when I start trading with that, even if I had a $2,000 account and it drew down $400, that's okay. I still have $1,600 left. And my very next trade, I went positive, what was that? $1,300. And the trade happened. Most of the trade happened while I was sleeping. I woke up to see I was plus $1,300. It was incredible. You can also look at these charts on different time frames. There's a lot to know. I'm trying to keep this as simple as possible and explain how I'm gonna go from a little bit of money to that Lamborghini and a house. And I'm not saying I need to make $1 million in the next 5 months doing Forex. It's not realistic. It's not what I'm aiming for. It's not. But if I can maintain, let's say, $300 a day income, which has been very easy to do on Forex, then that's another story, right? Because if you're regularly making $300 a day, and then some days where you're going to lose a little bit, and then you have another day where you're plus 1,300, another day where you're plus 600, another day where you're plus, you're plus 1,800, and then the next day maybe you're down $150, but those losses are small and the wins are big. And the more I mess around with this demo account, the more I'm using it and charting, doing all my proper analysis, the more I'm going positive with my results. And I mean, I set up a trade. You can set up trades in advance, so I can say, listen, if the market ever goes below, if these zigzags ever go below this point, I want to go in. I want in, and I want to say, if it's going to go below this point, it's going to go way down here, roughly, right? Because of past movement of the market. And I had a trade set up, and I said, listen, if the market comes down to, it's zigzagging, it comes down here, and it starts hitting below this point, I want in. And if it comes down to here, I'm out. I'm gonna sell all my shares, not my shares. I'm gonna close my position. It's called. I'm gonna close my trade position and take my profits. And then if it happened to go, it goes below this line a little bit, and then it happens to retrace and come back up, I want out. I want out as soon as it breaks here. Well, lo and behold, I set up the trade on a longer time chart, so it's like a 4-hour time chart. And I'll show you charts at some point. It's a whole nother world. It would make this video way too long, but I can do another video on charts if anyone's interested. A technical analysis, it's called. Anyway, so that chart I'd set up was on a longer time frame chart, a 4-hour chart it was called. So movement takes a lot longer on a 4-hour chart, and but your predictions and chart analysis is way stronger on that chart. And I set up a trade like a week ago, and just a couple of days, it started in my sleep. I was sleeping, and the market hit below this point and just kept going and kept going. I retraced a little bit to here, kept going. So at no point was that trade in the negative. And before I went to bed, it was at plus $1,900. And I didn't go close and get excited and be like, oh, $1,900, take profit and exit my trade. Nope. I kept my trade set up how it was, didn't touch a thing. And went to sleep, woke up in the morning, it was at plus $2,300. Closed, and my position closed. And yeah, incredible. And no point did that retrace. So I mean, realistically, I could have done that trade with a $100 account, because it never did retrace and go negative. But really, really neat stuff. And this is how I plan on going from having lost everything, right, loser, to Lamborghini. This is how it's going to happen, is trading Forex, trading foreign exchange. It doesn't seem like there's very many people that do it, and I have a knack for it. I have a background in doing some computer programming just out of my own interest, not professionally or like a job, and I have a background in art. And it turns out if you take those two things together and combine them, they're great experience points, great qualities to have for trading. And I'm not a gambler, so that takes the gambling aspect out of it for me, because I'm never being like, oh man, I really hope this goes through, and I'm betting the farm and win big, lose big, whatever, right? No, I'm doing everything very, very smart, and at no point have I, in my recent account, have I lost. I haven't blown up this account. So when you blow up an account or burn up an account, that's when you start an account, like a demo account, and you lose it all. And I did that many times, okay? I have burned so many accounts in this learning experience. I didn't care. It's a demo account. It's all about learning. So, I mean, how else am I going to learn how to not make mistakes unless I make the darn mistakes, right? There's a lot of resources available. Babypips.com. Pips are a percentage in point. And like a pip is, the fourth decimal place on a number. So if it's let's say it's $1.30 Canadian for every dollar American. Okay, so that $1.30 doesn't end there. It's actually $1.30, right? $1.30, and then there's actually two more numbers after that. So 1.3028, and that number on the end is a pip. And every time that goes up by another number or down a number, that's one pip of movement. So if it went from 1.3028 to 1.3029, that's one pip. And if I'm putting money on there and saying that for every pip it goes up, I could potentially win or lose $1. Okay, so let's say we're doing it that way. So I have $1. So every time that to the 4th decimal place goes up one number, I can be up or down $1. Okay, so it doesn't take a lot of movement as far as currency. It doesn't have to go from like $1.30 Canadian for $1 American to like $1.20 Canadian for an American dollar. It doesn't have to be that big of a movement. It's a really small movement. So it's just tracking those movements, learning how to predict those movements, and you can make a lot of money. And it takes a lot of practice, and I've done a lot of self-learning on the internet through videos, books. I've read a couple books on trading. It seems to be a lot of psychological stuff. It seems like people can get the technical analysis, the fundamental analysis, which is like news and things like that, and you can have all that, and I use both of those. And where people are messing up is they lose a little bit of money and then they want to make it back, so they make a riskier take a riskier position, and then all of a sudden they lose more and then they want to make it back. You know, it's like gambling. They keep trying to make it back by putting in more money, and I don't do that. I haven't done that while I've been trading Forex, and so the psychological end so far has been really good. Now, someone could use the argument, well, you're not using real money, so that's really easy to say. Right. It is, and I'll be keeping you posted on how it goes with real money. Still plan to start with real money July 1st, so that'll be a big deal. This is going to be one of my longer videos, I know that, and this is a big deal to me, and this is a big step, is learning this Forex stuff, because you don't need a diploma or a degree or special schooling or a ton of money to get into this, but there's people with big money in this, and I can see why. And if you do it smart and you learn your ratios as far as, you know, profit loss, people can do this. You don't have to be really, really rich to do this. You just gotta pay attention, learn everything, and learn all the, you know, learn all the words for everything and the definitions and this and that, and learn how it works, and learn what to watch for, and you know, doing things like keeping trading journals, a journal of every trade you make, and you can go back and look, well, you know, every time I do this and I bet that this pattern's gonna work, you know, it's wrong, so maybe don't do that one. And yeah, that's where it's at. This is Forex. I'd like to say Forex 101, right? This is my first video on Forex. I will do another one on charting. Please let me know if you'd like to see that video on charting, because it, you know, helps me with some drive to get that up and done, because that'll be a little bit bigger deal. It's going to involve drawing stuff and making lines and technical analysis, but it's actually really fun. And my roommate and I have both been trading on demo accounts for a while now, and both are at a point where we are very successful. So we both plan to go live at the same time. And we agree that, you know, once we kind of learn the hard stuff, which isn't even that hard, because I mean, I learned it, right? And once you learn that, you know, things can progress quite quickly. And not only that, but it actually becomes kind of fun. We will actually go in and look at charts and kind of predict where they're going to go, almost like a video game. You draw lines, you know, you do a little math and use some special tools and figure out where it's going to go, and then we can compare and be like, hey, well, where do you think this is going to go? He's like, well, where do you think it's going to go? We show each other, and lots of times they mesh up perfect, and we've taken some big trades together where we both agreed on everything, and we kind of, you know, we kind of talk back and forth about why we think it's going to go that way and how far it's going to go, and if it comes back, where, you know, where should our safety net be, that stop loss. And you know, it's a lot of money being made, and when you have two minds looking at the same thing, it sure helps. So I can see our first few trades being ones that we both sit down and take some less risky trades, because there's some patterns that are a little more risky than others, and there's some that's just like, if a pattern sets up, I mean, you're very, very close to guaranteed that it's going to move one way. You never are guaranteed, because the market is a funky thing. It can do whatever it wants, but there's definitely some patterns that seem to 90% of the time follow through. So I mean, if you put your money on those, and those patterns tend to have like really small percentage chance for loss, high percentage chance for gain, you know, even if we do that for the first bit, that's safe money. So that's probably where this is going to go. So yeah, that's Forex 101. It's a different kind of video, but people want an explanation of how I plan to get this house and a Lamborghini, and you know, what am I? I'm a half year in, so 4.5 years from loser to Lamborghini, right? That's what this is about, and that's what I'm doing. So 4.5 hours, 4.5 years. And I mean, really, it's just gonna be raining. Oh, that's rent. Oh, gee. You know, you're right between the sea. All right, I'll see you guys next week. Thanks for coming back to Loser to Lambo. Good to see you all again. If you like this video, click like. Where did that go? And if you want to see more, click subscribe. And if you have something to say or any questions to ask, please do. I'm easy to talk to, and I mean, I always reply. So it doesn't get much easier than that. Anyway, I'm out of here, off to lift some weights and tread water for about an hour. And then I can go home and read or something. And then upload this so you can all see it. All right, have a good night, everybody. Take care.